Hi, my name is Aidan McGinn and I am Marketing Director in OSK. I'm speaking to Imelda Prendergast, who is Partner in OSK Small Business Support. Imelda is going to speak about starting a business today. Imelda, what advice would you give to somebody setting up in business for the first time?
Yeah, I meet a lot of people who are starting out in business, and I'd normally advise them to make sure they have a good business plan done. In particular, that they know that there's a market out there for their product or service that they're going to be providing. Once they've done their business plan, and they would need help maybe from an accountant or from OSK in connection with their financial projections. But once they're happy that they're ready to go, they're ready to start in business, they need to get registered for taxes from the outset. A lot of people might let that go for a few months and with the intention of getting sorted out and let too much time go by. They're required to register for VAT once they know their turnover is going to exceed the registration thresholds. So they'd be as well to get registered for taxes from the start and put aside money, and that's where we would help them work out how much they should put aside for their VAT and their PAYE liabilities. So once they're sorted out for tax, then they need to make sure that they're covered from an insurance perspective. So if there's any insurance, professional indemnity or employer's liability or public liability insurance, they need to get that sorted. Also speak to a lawyer to get, if there's more than one person, if it's two or more, they would need a shareholders agreement or a partnership agreement. It's also a good idea to check out if any grants are available from local enterprise boards or county councils. And then of course they need to decide whether they're going to operate as a sole trader or as a limited company, and I would go through that with them in a fair amount of detail, the advantages and disadvantages of the various options there.
What's the difference between setting up as a sole trader and setting up a limited company?
The big difference between sole trader and a limited company is that a limited company is actually a separate legal entity. When you set up as a sole trader, it's you yourself in business. So you're responsible for the business, you are the business, and all the filing is done in your own name. Whereas when you're a limited company, it is actually a separate legal entity, and that's what gives it its limited liability. So if you're setting up in a business where there's a risk perhaps of being sued, limited liability is quite important in that the liability of the business is limited to the assets of the company. Limited companies pay corporation tax at 12.5% on their profits, whereas an individual will pay income tax at their marginal tax rates. In a situation where somebody is setting up, if they're going to be pulling all of the income out of the company for their own private use, so if it's quite a small business and they're not going to be in a position to leave funds aside for the business, then they will be paying income tax anyway. So we'd normally look at incorporating, like some small businesses would start out as a sole trader and then with a view to incorporating at a later point. And you'd normally look to incorporate a business where somebody is going to be leaving profits in the business and paying the lower rates of corporation tax. And also, for example, if they wanted to pay more into a pension, you can do that through a limited company because the company can make an employer scheme. It's generally easier to employ family members, make them a director, and give them a role within the company, and certain expenses are a bit more generous, like mileage and subsistence expenses are a bit more generous if you're operating through a limited company. But the big advantage of a limited company is the limited liability, although more and more now I think traders are finding that even when they have a limited company, they are being asked for personal guarantees on a lot of assets or on a lot of debt or bank loans in any event, but that would always be an attraction, is the limited liability.
What should be incorporated into a business plan?
A business plan includes an analysis of all aspects of the business. So you would start out by looking at what product and service you're going to be providing, and how that differs maybe from similar products on the market. You'd look at you do market research to establish where your potential customers are based. You'd also look at where your competitors are based and what your competitor advantages are. You do a SWOT analysis looking at your own strengths and weaknesses. And really you want to establish that there is a business in the geographical area where you're going to set up, that there is a market there for your business. A business plan would also include the operations for the business, so you would look at marketing and sales strategies, you would look at staffing and operations, how you're going to deliver on the services, like if somebody's going into business themselves, if they're going to be out getting the business, how are they going to, will they have staff, at what point do they need to take staff on to actually do the work. And then of course the financial projections would be a very important part of any business plan, and you would normally do maybe well, minimum 12 months, but probably up to 3 years, projected profit and loss account and projected cash flow. And they're very different, profit and loss from cash flow. Cash flow is very important. It's actually looking at the exact point, whatever week or month the money is expected to come in and out of the business, and the point at which expenses are going to be paid. And it's very important in a business plan to be really clear on what all the upfront costs are and how they're going to be funded. It's surprisingly expensive sometimes to set up even a small business by the time they add up the cost of the premises, and maybe doing upper premises and the IT costs and the marketing materials. There are a lot of upfront costs and they need to be funded. And also, the person setting up in business would need to take into account, okay, on one side is going to be the business expenses, but then they also have their own private living expenses that they have to keep going. So how that's going to be funded as well, because it may well be quite a few months before they're in a position to take some money out of the company. So that needs to be, their personal expenses wouldn't form part of a business plan, but it's something that they would need to look at, their own living expenses, to make sure that they can meet those as well on a monthly basis.
Imelda, how does a person remain tax compliant during the year?
To remain tax compliant, the most important thing is to make sure returns are filed on time and tax payments are made on time. So all businesses, once they start in business, they have to register for VAT and PAYE from the outset. So the VAT returns are normally due every 2 months, and the payroll returns every month, although some smaller traders can file 3 monthly or 4 monthly VAT returns. But the PAYE on employees and directors' salaries is always due every month to the revenue. And some people might find it easier to pay by direct debit. That is an option. And with direct debit payments every month to the revenue, they need to make sure they're paying sufficient taxes, but they only have to file one return at the end of the year. But it is important to make sure that they meet their filing deadlines, because that's one thing the revenue, when they're selecting businesses for audit, they would look at who's tax compliant and who's not, who's getting their returns in on time. So they also then need to make sure that they're putting aside sufficient money to pay their taxes. And for sole traders, it's slightly different in that they don't pay PAYE on their own salary from the company, from the business. They pay income tax under self-assessment, which is generally just due once a year, every October. So they need to make sure that they're, from when they start in business, they're putting aside sufficient money to meet their income tax liability when that falls due.
And at what stage should a potential startup contact an accountant?
I think at the outset, when they're starting, because they need to make sure that they, whether they should set up a limited company and get that incorporated, that needs to be done when they're starting to trade, and also to get registered for taxes. And just to be clear as well on their own financial management, particularly if it's quite a small business, they probably won't be employing a bookkeeper initially or a financial management accountant in their business. So they would need advice and guidance from an accountant on how to manage their finances going forward, and also to do projections. It is important that they do their cash flow projections, at least for the first 12 months that are going to be in business, and they would need an accountant to help them with that, and to work out their taxes, to work out their VAT, to make sure they know how to file their returns, and how much they need to be, making sure that they have sufficient funds available to meet those liabilities when they fall due. So I would always say speak to an accountant and a tax advisor, as they're starting in business, just before they get started.
Imelda, what services do you provide and how can you be contacted?
We provide full range of services to people setting up in business. I would always do a consultation with a client, and we don't charge for the initial consultation to work out whether or not they should set up a company or be a sole trader partnership. And once we've worked out what's best for them, then we get that set up for them. We do the taxes registration, and then we provide ongoing bookkeeping, payroll and VAT support during the year. We do the full financial statements at the end of the year. We do the company secretarial filing and the corporation tax filing and personal tax filing for the directors as well. So it's kind of a one-stop shop. We take care of all their tax, audit, accounting, company secretarial. It's all taken care of here.
Imelda, thank you very much for your time, and thank you for visiting OSK.ie.